Now friends, come to this particular question 26001. That's a question ID number. Okay. Now friends, in this particular question, you see all these, I think PNL data has been given and so many adjustments have been given. Of course, you have to go through each and every adjustment. There is no doubt about that. But at the bottom line, you are required to compute the total income of the firm on the assumption that they failed to comply with provisions of section 184. Okay. And I think that partners remuneration, some data is given. It is in the PNL. Interest to partners. This figure is given. This is 20%. Remuneration data has been given to us. So the relevant data with respect to section 40B has been given to us. Now whether working partner, not working partner and all that might be given somewhere in the statements, or we might have to make a suitable assumption, or might have to make a suitable note. But see, this section 184, first of all, understand that. Otherwise, it is a more focused question when it comes to the business income. Okay. Now, first of all, section 184, see this particular barrack provisions. Okay. 184 is some theory conditions with respect to a partnership firm. Keep this in mind. Very simple conditions. Okay. It's not at all a difficult condition, but they are the conditions. Some theory conditions. Now, if you do not comply with the theory conditions which are provided under section 184, then there is a consequence. Okay, and that consequence is given to you in this particular section 185. First of all, let me tell you the consequence. If you fail to comply with the conditions of section 184, then no deduction on account of interest, salary, bonus, commission, remuneration. No deduction shall be allowed. Okay, and that section 40B adjustment which we normally do with respect to the assessee being a partnership firm, that is something which we don't have to do. Okay, so first of all, in the given question, it is told to us that the firm has failed to comply with this particular section, which means that section 40B adjustment of interest and remuneration is not to be done. Finish. So ultimately, friends, this particular question will be a question on business income. Partnership firm, the relevant adjustment, because the heart of partnership firm computation is just the interest and remuneration adjustment. Otherwise, it is more of a business income computation. So in this particular question, section 40B adjustment is not required. That is a first ever conclusion. Okay. Now let me tell you what are section 184 conditions. Okay. Now these 184 conditions are the theory conditions, and no need to go into the technical details, but you understand it's a documentary condition. That what is a firm? The firm means it has to be evidenced by an instrument in writing. That means it has to have a partnership deed. So moment, when you are solving any question on the partnership firm, you have to have these things in your back memory, whether printed or not. No, firm means there should be a partnership deed. Okay, and the individual share of the partner should be specified. So equal, 30, 40, 50, 50, whatever. It should be specified. Okay, these are the basic conditions. This is the firm. Only then it will be regarded as a partnership firm. Okay, then in the year in which you are filing return, that means the first year after you have already been formed, then the certified copy of the instrument, that means certified copy of the deed, should be submitted with the return of income. Okay, further, if there is any change in constitution, then also whatever is your the change in constitution, like change in profit sharing, change in loss sharing, or whatever, any such changes, it should be supported with the relevant documents, and that particular document should be submitted with the return of income for that particular year. So you have to furnish a certified copy. Wherever there is any change which has undertaken. So these are the theoretical procedural conditions. Okay. Further, if there is any failure referred to under section 144, that means a best judgment assessment. So in the assessment procedure, there is certain violations. For example, a notice has come but you did not comply with the notices, and the officer had to resort to section 144, that is a best judgment assessment. In that particular case also, you will not get any deduction with respect to section 40B. In other words, any of these kind of violations, if it happens, that means, for example, you can say that the certified copy of the instrument has not been submitted with the return of income, for example. So you will say that, oh, 184 is violated, that you are a partnership firm but you have not done that procedural condition, something like that. Okay, so if any of these violations occur, then the conclusion is that section 40B you will not get. So first note, and which is the most important note in this particular question, that section 40B adjustment, you have to forget it. Okay, so ultimately I will disallow. Okay, but I will not give any of this particular adjustment with respect to the partners remuneration or interest. Section 40B I will not give. Okay, now come to this particular question. Now I will start with profit as per P&L as usual. Profit as per P&L I will start. To this I will do all the adjustments, whatever the adjustments are there, A, B, C, D and all that. After that I will come to all the debit credit sides, and thereafter I will conclude my answer. Okay, so how much is my profit as per P&L? Is 45,000. So this is my beginning point. To this I will do the adjustments. Following additional information is available. Depreciation includes 2,000 for the asset purchased on hire purchase basis, so there is nothing wrong. Even depreciation on the asset purchase on hire purchase basis is eligible for the purpose of depreciation, so nothing wrong, so no adjustment is required. However, you can always write that depreciation under income tax as per block of asset basis and all that. So assuming that the depreciation is, that means a block system, the way it is to be calculated is properly done. So that kind of summary points you can always add up to this particular answer. Point number B, bad debts include 1050 amount written off which was given as an advance to the supplier. Now this is one of the very beautiful point, and some of the courts, in fact the Supreme Court had an occasion to discuss this particular point. Okay, now normally when you say the bad debts, normally a bad debt, that means a debtor turning bad. When you say debtor turning bad, that means a debtor should have been created out of the sales. Okay, so general understanding, accountant will understand that from the sales the debtor will come, the debtor will become bad, and if you are not able to recover the money, you will get the deduction on account of bad debts. A general understanding of an accountant. Okay. However, the Supreme Court has explained that the bad debts does not mean that the sales, debtor and bad. Not like that. This is not the way we have to understand the bad debts. The bad debts is something which you have actually lost. Supreme Court has explained the some money which you have actually lost. You have lost the money irrecoverably. That means it is a total loss for that particular money. Okay, you are not able to recover that particular money. Secondly, this particular loss should not be capital in nature. That means had it been a capital loss, you will not get the deduction. In other words, this particular money that you have lost, it should be in the course of the business. It should be in the course of the business, should be in the ordinary course of the business. Okay, and you lost the money. Okay, so now you had given bad debts include 1050 return of advance which was given to a supplier. So when you have given advance to the supplier, it was a balance sheet item. So if you see the journal entries and accounting entries, it is a balance sheet item. Okay, but you have lost the money because you have not got that particular material. So the money which you have lost, I repeat, the money which you have already lost, okay, it is in the ordinary course of the business. So naturally these particular monies are allowable as deduction, and it is already debited to the P&L because it is already included in the bad debts, and therefore no adjustment is required on this particular front. It is already told you that you have to write all the theory explanation as I am giving it to you as a part of the answer. Okay, point number C, bad debts include 300 as a provision for bad debts, a general practice. So naturally I have to add 300. Because the general practice is never accepted under the tax laws. Okay. Point number D, bad debts include 200 debt which represent receivable from Mr. A. This was taken over at the time of the purchase of business 12 years back. However, during the year, no police complaint has been filed or no suit initiated for the recovery from Mr. A. So, see, this is a debtor out of a business which you might have taken over. So this is also one very practical situation. Supposing in the past some takeover of the business, or of course this is not a corporate entity, but supposing amalgamation, demerger like this happened. Supposing they are called the business reorganization schemes, and out of the business reorganization you took over the assets and liabilities, in that the debtors have also come, okay, and that debtor now becomes bad. So, will you be eligible for the purpose of deduction? And normally it is said that a debt of a predecessor and in the hands of the successor, like this also some people say. But after all, it was an ordinary business situation. So, if it was an ordinary business situation, no matter how many years you had taken over, you had to receive the money. You lost the money because you are not able to enjoy that particular money, and ultimately it's a total loss. Now the doubt came into picture in the question like that no police complaint was filed or no steps were initiated for the recovery. That means you have to recover 200. You have to recover 200. What legal steps that you have taken to recover? So nothing you have done. Okay. So does it become a little bit debatable now that you have not taken any steps and you are saying bad? How the things have become bad? You have to prove it, no, that it is bad. So the courts have taken the view that sometimes it may not be practical to take the steps. That is also a possibility. For example, for a small amount of debt, small amount which you turn bad, you don't expect to go to a criminal procedure, or you don't expect to do file suit, because it also has all associated costs. So the bad debt money you have actually lost is more than sufficient. This is how the courts have explained. Even if these legal steps you have not taken, but it should be bad, and if it is actually bad, it is allowable. And in this case, I require no adjustment because it is anyway debited to the P&L. Point number E, selling administrative expense include fees paid to CA for preparation of the return and audit. So it is a chartered accountant's fees. That is also a part and parcel of the business. So there is nothing wrong. Okay. So this is okay. No adjustment is required because it is anyway allowable. Point number F, during the year, some loans of 6,000 were advanced to BN company in which there were common partners. There is no interest charged from BN company. Prevailing interest rate is 10% per annum. Okay. Now see, in this particular situation, you are giving what should I say, a money to a related party, because see, there are some common partners, and you are not charging any interest. You are not charging any interest. Okay. So in such a situation, should there be any, what should I say, disallowance of the expenditure or something like that? Now on this particular point, there are a lot of what should I say, debates which is possible. So I want you guys to first of all imagine a situation. Forget this particular point for a moment apart. Okay. See, supposing if you borrow the money, at the rate of some percentage, example 10%. You give this particular money to a sister concern, or you can say a related person, at the rate of 11%. So you borrow the money and you lend the money. Okay. So what is going to happen is, when you lend the money, you will have income and you will have expense also. You will have a corresponding income, you will have corresponding expense. So practically you will feel very comfortable. It's a very, very good transaction, fair kind of a transaction. Okay. But supposing if you borrow the money and if you lend it to a sister concern, which is interest free. If you lend it to a sister concern, supposing interest free. So if it is interest free, you will not have any income. You will not have any income because it is interest free. Okay. But you will have a corresponding expenditure. So you will feel in the computation that there is an interest burden, but there is no corresponding income. Second situation. Okay. Third situation. Supposing if you have own money, that means you are not borrowing the money. You have your own net worth. You have accumulated reserves, accumulated surplus, accumulated savings, whatever you want to say. You have your own money. Okay. That you give it to a sister concern. That means basically I'm just using sister concern for sake of simple English, because I can say a related party. Okay. Sister concern at the rate of some percentage, or you give free. Okay. If you give at the rate of some percentage, there will be an income. If you give it free, there will be no income. And there will not be any corresponding income because it is your own money. Okay. So you will not accrue interest on your own money. Okay. So you will not have any corresponding income, but Other way it is possible. Okay. Now see, in all this situation, the major problem which comes in the tax assessment. Okay. In the tax assessment, this situation is very okay. Assessing officer will have no objection. You are borrowing and you are lending. Reasonable interest you are paying, reasonable interest you are charging. That means your P&L gets balanced out. Okay. But if this is the situation, where you are interest burden, but you don't have the corresponding income, assessing officer will be very angry, and assessing officer will say, angry means not that actually angry, but he will be having a lot of discomfort because you are taking up some expenditure for which there is no corresponding income. So these expenditure he will seek to disallow. These expenditure which you actually have, he will say that this is not a reasonable expenditure and I want to disallow. And this point is going to become debatable, but you can practically say that even if he is disallowing on a reasonable basis, he can very well justifiably do that. Okay. Now see, if it is your own money and if you are lending at some interest percent, there will be no problem because you will have an income. So this will be a no problem because anyway you have an income. Okay. Now, supposing if you are giving your own money, but if you are giving interest free. Okay. So this will also be a little bit of, a gray area. Like, officer will say you're not charging any interest. So you're just passing on the money just like that. And just because it's a related party, you are doing that. And therefore, he wants to, dim something to be your income. But how he will do? He cannot disallow the expenditure because there is no expenditure. Disallowing he cannot do because for disallowing there should be expenditure. No, that is going to be disallowed. You understood that? So if it is a free, he may say that there will be some reasonable figure which should be charged as deemed income. In the tax assessment, it can be thought like that, but this is again a debatable view, but it should not be tolerated. It should be considered all fair because own money you are giving to related party, that is also interest free you are giving, so there should be no problem in such a transaction. So officer will say that there should be some deemed income, but we will not do such adjustments in the terms of computation. Now if you come to the question here, see, during the year some loans were advanced to BN company. That means I have given loans to someone, there are common partners and there is no interest charged from BN company, so it is interest free. Okay, prevailing interest rate is 10%. So what I want to bring up is that, see, there is no corresponding income because it is interest free, no interest is charged, and the prevailing interest is 10%. So what officer will like to say that 6,000 into 10%. Okay, these I will say that you charge it to income because you are not charging interest, so you should have charged, and so it should have been brought to tax. But there is no actual income, there is no real income in this particular circumstances. So these additions to the income should not be done and no adjustments will be required. But this point is always a debatable point on the grounds of genuineness, because there is no real income, no question of any taxation ever coming into picture. Okay, then point number G. In past, the assets of the firm was revalued and there was a corresponding increase in the capital of the partner. The revaluation had doubled the capital of the partners as appearing in the previous balance sheet. Now see, because of the revaluation, the capital figure has changed. Because of the revaluation, the capital figure has changed. Okay. Now, when the capital figures have changed, interest to partners, the permissible limit is also going to change. Interest to partner, the permissible limit is also going to change. Okay. So you will wonder that because of the revaluation you increase the capital. So if you say that X percentage on capital you are giving interest to the partner, so it is on the enhanced capital. So your interest limit under section 40B is going to change. Okay. So will that be accepted or not accepted? However, in the given question, we have anyway not to give 40B. So what I'm going to do is, because that interest has come, this entire interest I'm going to add. Okay, add entire 20,000. Is that clear? So there is no deduction of section 40B. And that's the reason this particular point G has become, redundant in the given question. But if in a different question, if something like this comes, keep that in mind, that the capital interest on capital. Okay, that was section 40b says interest on capital. Okay, this capital will include all your past year's profit, past year's capital adjustments, everything. It is something like your opening capital. It is something like your opening capital, which includes all the past year's adjustments, whatever type. Sometimes, in the accounts you have studied the goodwill adjustment in the partner's capital account, whatever. So you don't, that deviate that and confuse yourself. Opening capital, okay, on that, because it's simple calculation under the tax laws. So any of these things will not matter. Okay, the change in capital calculation of the earlier years will not matter in terms of calculation. Point number H. In the balance sheet of the firm, the loan from Mr. B 275 is being carried forward since 15 years. So this is a doubt about a bogus loan. This is a doubt about it. Okay, so this is a pure question of fact now, whether you want to make the additions under section 68, 69 and all that, saying that this is unexplained cash credits outstanding since so many years, and all these ifs and buts that can come into the picture. So you can write whatever the suitable comment, that assuming genuine loan, not genuine loan, depending documents. Now question is not absolutely clear in practicality, but so I will say that just because it is outstanding and loan since 15 years, that does not mean that it is bogus. So I will not do any adjustment. So on this particular front, no adjustment is required. Okay, further, so here I am doing this adjustment assuming that this is a genuine transaction, although it is 15-year-old. Okay. Point number I, miscellaneous receipt include 2,45,000 refund of indirect tax. However, this refund is under protest. Okay, so refund under indirect tax law, which is under protest, doesn't matter, but you have actually got the refund. So you have got the refund, it is always a deemed income, and so many types such situation, even in the past I have explained that to you. So it is anyway your income, so you do not require any adjustment because it is already included in the miscellaneous receipts. So miscellaneous receipts are already including, so no need for any adjustments. No adjustments are required. Point number J, miscellaneous receipts include 260, include interest 10 of the past, which is a loan written off. Loan was granted by BN company for the purpose of business needs. Okay, now when it comes to the interest and the loan which is written back, even these kind of situation, very practical and very important. Miscellaneous receipts include 260, includes interest 10 of the past, so I will say 250 plus 10. Okay, now which is loan written off. Loan was granted by BN company for the purpose of business needs. The loan written off. Okay, section 41, remission or cessation of a trading liability. I repeat, remission or cessation of a trading liability. So this 250 is a trading liability. This is a ordinary business transaction. I repeat, this is a ordinary business transaction. So if you say that it is an ordinary business transaction, it is written back, then it will be regarded as a income. Then it will be regarded as a income, and it is already credited. It is already credited to the profit and loss. So you will not need any adjustment because it is anyway a taxable income. Okay, but supposing if you assume that this business needs was to acquire a capital asset. That means this loan was supposing directly linked with the capital asset. So it was for the asset acquisition, and if it is written back, it will be amounting to capital receipt. It will amount to a capital receipt, and the capital receipt will not be chargeable to tax. I repeat, capital receipts will not be chargeable to tax. Now, one thing is not clear in this question, that business needs. What kind of exact business needs that you had it? See, asset acquisition is also a business need. A working capital loan is also a business need. A business need is of both the types. So that is not absolutely clear on this particular front. Okay, so you better assume something very properly and thereafter take the decision. Okay, so in the past, some working capital loan and like that, I had already solved some questions in earlier chapters. However, here in this particular question, I assume that this is for capital asset. So I will adjust this particular figure. Okay, so I will say that this is not an income. This is not an income. So I will say minus 250. Like this, I can do the adjustment. Now, when it comes to the interest burden, okay. Now, interest you have to think separately. First of all, see, interest return back. Interest return back. Okay, it will be regarded as income if it was allowed as a deduction in the past. So, in the earlier years, whether the interest was allowed as a deduction or the interest was not allowed as a deduction. Now, this particular interest is not to the banks or financial institutions. That means section 43B will not come into picture in the past years. So, this is basically a party to party transaction. Okay. So, if you say that this 10 was already allowed as a deduction in the past, if it was already allowed as a deduction in the past, then in the current year, it is an income because it is returned back. Okay. So, I will write a note here saying that this interest was already allowed as a deduction in the past, and therefore current year it is anyway the income, and since it is anyway income, it is already included in the miscellaneous receipts, so require no adjustment for this 10, because in the earlier years it was already allowed as a deduction. If you say that it is assumed, okay, it is already assumed. Okay, so one thing which I once again repeat, that for the principal amount you have to think differently. For interest, you have to think differently. That is the main point. That is one of the main point. And then you have to take the decision. Okay. So that's it for this particular point. Now next point. Assessing officer observed introduction of capital from partner Mr. X 4,500 in the capital account. Okay. This was in cash. Now this is very pathetic, in cash. However, corresponding entry in the personal books of Mr. X is not observed. Since account does not tally, officer proposed to add it to the income of the firm. See. Assessing officer of the capital from the partner Mr. X. Now listen very carefully. Supposing if you say in the books of the firm, the partner's capital account, okay, of Mr. X 4,500. So this is 4,500 credited. This was in cash. Okay. Now in the personal books of Mr. X personal books, the firm's ledger, because partner's books, firm's ledger, and the firm's book, partner's ledger. Okay, I should be showing investment in cash of 4,500 rupees. I should be doing it like that. Okay, now this figure are not telling, and that's a problem. This entry is not telling. Okay, normally it should tell you because it is in cash. If I am paying cash to the firm as a capital contribution, firm is recording cash, so it should be recorded in my books also. But these things are not telling. So what the doubt comes into picture, that credit under section 68, listen very carefully, unexplained cash credit. Now practically you will have no thing to explain because ledgers are only not telling. Ledger should tally. Okay, so officer is trying to make addition under section 68 in the hands of the partnership firm. At the same time, it is an investment of the partner. So section 69, 69A, etc. provisions can also be applicable, that you have made the investment and you are not able to explain the source. Have you understood that? So in this particular situation, which section should be applicable to the given circumstances? Which section should be applicable to the given? So if you say addition to the firm, I will use section 68. If you say addition to the partner, you will use 69, 69, etc. provisions. Is that clear? So which provision should be applied? Now officer is saying that he wants to add it to the income of the firm. Okay, he can say nothing wrong if the firm has failed to explain. That is one of the main point under section 68, 69, all the series of provision. Firm has failed to explain. So in this case, you did not explain the transaction, I will add it to your income. It can be justified. But if the firm explains, okay, that okay, we have got cash, so we have recorded. Now he has not recorded, so you go and catch him. If the firm explains, then firm's addition should not be justified. Okay, so it depends on the circumstances. Okay, so in the given case, whichever way you want to write a clear note. Okay, however, for my answer solving, I will say that firm is explained, so I will not make additions when it comes to the firm's assessment, because firm is able to explain. I can take that view. So whichever way, you can take the view and give the answer. Okay, so this particular point has been clarified. Now come to the P&L items. So credit side miscellaneous we have considered. Selling administrative 30,000 paid in cash. So I will add 30,000, but don't forget 30,000 aggregate in a day to a person. Now that precise data is not printed in the question. So if you want to write a clear note before you make the additions on account of cash expenditure. Okay. So I will add 30,000. Then bad debts and depreciation. Okay. When it comes to depreciation, book depreciation add, tax depreciation less. But again, that data is not there. If you want to write a note that book depreciation is same as a tax depreciation. And so no adjustment is done. Okay. Interest to parties. Now interest to parties, there is nothing wrong. Okay. Interest to partner 20,000 I have already added. Remuneration to the partner total I will be adding. Okay, 1,40,000, and I will be computing my income. And because of this section 184 violation, section 40B remuneration for and interest deduction will not be allowed. That's the total and get the answer.